The US will never default. Why would they do that? They can print their own money. When you can print your own money, you will print money. You'll press a button. It'll go onto the Fed's balance sheet. The Fed will buy the bonds and just stick it on their balance sheet. As an investor, I look at everything in duration and probabilities. And so I think there's a very high probability that if we have a problem, if we have a steep debasement in our currency because the Fed prints so much money that it melts faces, well, the things that are going to move are Bitcoin and gold.
Over the past few weeks, especially starting from the Silicon Valley Bank collapse and widespread news of China's de-dollarization agenda, more experts and macro analysts have been warning about the impending collapse of the dollar and the U.S. economy as we know it today. Some analysts, like popular macro analyst Lynn Alden, believe the end of the dollar hegemony might be positive for the overall economy in the long term, as it would bring an end to the country's decades-long trade deficit. Others have argued that the U.S. is sinking fast under the weight of its massive debts, incessant money printing, and terrible fiscal and monetary policies. For people in this category, what we are witnessing is the death of a superpower and the birth of another. According to them, the country's continued survival after the impending collapse is as shaky as the current state of its coffers. However they choose to observe and analyze the situation, most analysts agree that there is a massive storm ahead for investors, not just in the United States, but also in many of the world's leading economies. For James Lavish, former hedge fund manager and popular Bitcoin enthusiast, the United States is caught in a vicious cycle of money printing, currency debasement, economic challenges, and more money printing and currency debasement. Lavish believes that the United States has successfully buried itself under its massive load of debts, with only one viable solution: to sink deeper in debt as expenses continue to increase and revenue takes a nosedive. According to Lavish, the United States has been able to wedge itself deeper into a massive debt spiral with no end in sight. During a recent interview with InvestAnswers, Lavish discussed his outlook for the U.S. economy and the only viable solutions for investors looking for a way out of the mess. Lavish explained that politicians are never going to consider an austerity program, which would mean cutting back on mandatory expenses like Social Security, long-term defense spending contracts, and Medicare. In this same vein, they can't raise taxes enough to cover the crater-like deficit hole. The only solution is to keep piling up the debts, reshaping the economy into a bigger nightmare for investors. But Lavish has some simple short and long-term fixes for savvy investors looking to exit the doomed system. He says to buy Bitcoin and gold, one for the short term and the other for the long term. Before we listen to James Lavish, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. We love to hear from our viewers and subscribers, so if you have any comments or observations, please drop them in the comments section below. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks and enjoy the video.
64, he's dead. It is absolutely dead. I mean, the problem is, James, the manipulation of money has been going on for so long that we now find ourselves in a situation where it will perpetuate in the United States for a long time. I know we have Canadian listeners. I know we have people that follow me in Europe, and they may not have as long of a time as we do. We have the luxury of being the global reserve asset and currency. So, but that said, this will only go on for so long. It is not sustainable forever. Now, the problem is, what do you do? How do you position yourself to not be flattened by some sort of major credit issue, like another breakdown like 2008? Well, you own hard assets. And I like to own gold, silver, and Bitcoin. Those are the hardest assets in the world. Bitcoin being the successor someday, and being probably the only one standing. So that's just it. This is a deep one, and it's reality. But I want to make clear that it's not. While we sound alarm bells here, and what we're trying to do is wake people up. It's not a panic. You don't need to take all of your money out of the bank and, buy gold bars and shove them in your mattress quite yet, but this is, it's a problem that's not going to go away. And when it does collapse, it's going to collapse fast. And so, that's my fear. That it may collapse fast. And so everything that I think of and I talk about and I look at, it's all probabilities. It's all based on math. It's all based on, that there's a higher chance of this happening than other things. And so that's how I look at the world. When you go out and talk to normal people in the world, you just go walk out your front door and talk to, 100 of your neighbors that you haven't already tried to orange pill, and just 20 of them, you know, 19 of them will look at you like you're crazy when you talk about Bitcoin. One of them may have heard about it and possibly have dabbled in it or thought about it, but that's it. I mean, at the absolute most. So you're talking about just, a fraction, a tiny percentage of people who actually know about Bitcoin. So I look at gold as kind of like a bridge, and this is not about gold. This is about hard money. I look at it as like a bridge to that next step, And so the issue is right now, the global reserve asset is the US Treasury. And the US Treasury is in a debt spiral, and that is the issue. And so how do you bridge that? How do we don't know what's going to happen between now and the next 5 years, but I feel very confident that gold is a very good store of value. Now, beyond that, I don't know. And so if gold doubled or something from here, well, I would sell all that and put it into Bitcoin,
Yep.
because Bitcoin is the ultimate successor to hard money. And this is the premier asset global. This is the premier hard asset of the world. Now, when people wake up to that, it'll get to the point where it doesn't go up double or triple from here. I mean, it's up 20, 50, 100x. And that's where, that's where we're going. But I'm also an investor, right? And I think of things in timelines. I think of things in maturities and durations. And so you've got your lowest duration, which is the thing that you want to own with the lowest duration is US Treasuries. I just told you that they're in a debt spiral,
Yep.
right? So why would I own them? Because I have capital needs for the next 6 months, the next year, the next 2 years. And so I need to plan for that. I know that the dollar is debasing. I understand that, but that's what our currency is. So I need access to that quickly and easily, right?
Yep.
The volatility of Bitcoin does not give me ready capital. It doesn't fit my personal liquidity needs. Now I have plenty of that in my net wealth, but that's put aside forever. That's in a forever bucket. Gold is in a between now and forever bucket.
Unlike other more traditional Bitcoin enthusiasts, Lavish is neither predicting the immediate end of the United States economy nor ignoring the need for other assets, especially to take care of financial transactions in the short term. However, like every other Bitcoin investor, Lavish believes that the leading crypto asset will be the top survivor and eventual winner after everything unravels. During the interview, the former hedge fund manager also discussed the easiest way to orange pill people who are not completely aware of the precarious situation of the U.S. economy. He also discussed what he believes would be the next catalyst for mass Bitcoin adoption within the next few years.
It all has to do with money and just teaching them about money quickly and the reality of money manipulation and why there is inflation. And you can do that pretty quickly. Everybody's feeling inflation, the effects of it. Everybody's feeling the effects of, if you're not a billionaire, you're feeling the effects of the separation of wealth in the Western hemisphere, right? You're feeling the effects of central bank manipulation. Why? Because the Cantillon effect, Cantillon if you're French, right? So, but you're feeling that effect where they print money, the ones who benefit the most are closest to that spigot of capital where it just flows out into their bank accounts, into JP Morgan and Bank of America and Wells Fargo, just flows right into those bank accounts. So those executives, the extraordinarily wealthy people who have access to that really cheap capital, and own assets, right? So if you own assets and you have a period of a rapid expansion of M2 money supply, well, where does it go? Where do people put that? They put it into assets. So if you own those assets, they appreciate, but in reality, what's happening is that they're just holding their value against the steep depreciation of the dollar. And that's where, and everybody feels that, you
Yep.
know, everybody feels it. You go to the grocery store, if you buy the same exact things every single, I can't tell you how many people I've talked to that said, yeah, I used to buy the same thing every other week. It's, $120. Now it's 150, 170, $180, the same items,
Yeah.
you know? And so I think it's really easy to get people to understand the manipulation of money and why we need to stop that. And then the next step is, yeah, well, I should own, they think, I can't tell you how many people have said this to me. Yeah, but it's backed by gold. The dollar's backed by gold. When you explain to them that it's not, okay, then they think, oh, I should buy gold. Right. Okay, that's a good idea. That's great. I'm not going to argue against that. However, how are you going to transact with gold? If you needed to leave your country, if your country becomes oppressive, if you're in Venezuela, Lebanon, Ghana, how do you leave with gold? You don't, and if you got your 12 or 24 word passphrase, you can go anywhere in the world with Bitcoin. Number one, I really would like to see adoption occur organically and and systematically for a long time, because that would be, I believe, a better scenario, and meaning safer, better for everyone, where Bitcoin just marches its way to someday becoming the global reserve asset, right? Where it's the place where people can store their money, their value, no matter where they live, whether they're in Ghana, Venezuela, Saudi Arabia, United States, it doesn't matter. That's where they want to hold their value, right? So, but in the meantime, we have to deal with what's going on. And if there is a catalyst in the short term, so that's long term to me, but if there is a catalyst short term, it would be what we call a credit event. And you saw a credit event back when Lehman Brothers collapsed. We saw a credit event back when long-term capital management was on verge of collapse. We saw an interest rate event back in SVB, which could have turned into a credit event. So what's a credit event? It has to do with the massive amount of leverage that we have in the system, and one debtor fails, that causes a creditor to fail, which causes contagion across the financial system, and that's a credit event. And it could happen. It could happen in the treasuries. We could get to a spot where we're issuing so many treasuries. We've tripped the debt ceiling, even if it's a technical default where they just quickly approve a new ceiling and they pay the creditors back. Even if it's that situation, it doesn't look good for the U.S. and the U.S. Treasury. That's a bad event.
Yeah.
So, but as we keep issuing more and more and more treasuries, James, we get to the point where we're crowding out certain balance sheets. There's only so much these balance sheets can consume treasuries.
The U.S. economy is dangerously over-leveraged. There's a lot of uncertainty in the markets, and it's only going to get worse over time. In one of his recent Substack posts, Lavish analyzed a report from the Congressional Budget Office, CBO, detailing its federal budget projections for the next 10 years. In addition to gloom predictions like inflation remaining above the targeted 2% until 2026 and an increase in the unemployment rate, the CBO expects a 47% increase in revenue and a 60% rise in expenses over the next 10 years. According to Lavish, the 47% increase in revenue is extremely optimistic as the CBO does not account for any recessions ever. Lavish expects a recession to hit sometime this year and continue into next year, slowing down growth and further impacting the CBO's 47% revenue growth projections. To borrow from Lavish's apt conclusion, the Treasury's debt temperature this year and for the foreseeable future is hot. Like Inferno hot, the kind that leads to an eventual breakdown. What are your thoughts on James Lavish's apt analysis of the current economic situation in the United States? What are you doing to protect yourself from the storm that is about to hit? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel and turn on the notifications bell so you never miss any of our future uploads. Thanks for watching.